In this section, we're going to have a look at trend lines now, and there's effectively two different types of trend lines that we're going to look at, and trend lines are something that are used quite liberally and have a really a wide range of interpretations in terms of how to use them, when to apply them, and so forth. But we're going to look primarily at the Tom DeMark trend lines and common sense trend lines. Before we learn how to apply trend lines, the first thing that we really is important to understand is we need to be able to identify, of course, the price swings as we mentioned earlier, and identifying when the market is making higher highs and higher lows, which constitute a uptrend, as well as when price is going sideways and when price is moving and making lower highs and lower lows, which make a downtrend. Quick summary on Tom DeMark trend lines. In an uptrend, Tom DeMark trend lines are drawn by connecting the newest cycle swing low to the most recent cycle swing low. And we are going to draw these for you in just a moment. But in a downtrend, Tom DeMark trend lines are drawn by connecting the newest cycle swing high to the most recent cycle swing high. And the trend lines are drawn from the cycle swing low that is closest to the market and pulled backwards towards the most recent high low. A cycle swing low is defined by price action on a specific time frame that results in a candlestick wick that has one or more candlestick wicks that are higher on either side of the lowest wick. And a cycle swing high is defined by price action as a specific time frame that results in a candlestick wick that has one or two more candlestick wicks that are lower on either side of the highest wick. Let's have a look at what that looks like. We'll just run through the basics here of how to draw a Tom DeMark trend line. We see here a uptrend, and the reason I don't draw it picture perfect is because in the market it's never going to be absolutely picture perfect. So what we do is here we have price moving in this uptrend. We have a newly established low, and what we would do is, because we are trailing the market with the Tom DeMark trend lines, is when price makes a new low, we will take the trend line and we will draw it from the most recent low back to the previous low that is of course lower than the recently established low, and then we will move our trend line out forward and anticipate that this will act as a level of support in the future. As price continues to make a higher low, we will take the trend line, move it from the most recent low back to the previous low, and then extend it out into the future to act as a level of support. Let's have a look at what that would look like on a chart. We're looking at a 15-minute chart, and we see that price has established some key lows recently, and we are looking at, this is the most recently established low. These lines here, by the way, are simply just lines that are connecting some recent price swings. So let's go back to the far left-hand side of the page, and we have this low number 3 as it's noted here. We are drawing levels of support using Tom DeMark trend lines, so we would make our first connection from this low back to the previous low and extend it out into the future. On the next price swing, we will take our trend line and we'll move it from this low to the previous low and extend it out into the future. These would already be established, and then what we would do is we would trail the market and start to connect our trend lines on the most recently established low to the previous low, as we see this cycle swing here, establishing a low, connect it to the previous low, and extend it on into the future. Now at some future date, these trend lines will act as a level of support or as a key level. If the market is to penetrate through these levels, then we could look for a potential reversal with the market taking on a new direction. Clearly, as price proceeded forward on all of these small swings here, we could have a multitude of time to mark trend lines labeled on this chart, but we're only going to take the most recent price action. If price is here at this point in time, then our most recent price action, we're just going to step back even one further. Our most recent price action will go from this low to the previous low and extend into the future. As we see, consolidation has penetrated through the trend line. Now, if we were to look at it at a more micro level, we would take the most recently established lows to the previous lows and extend it into the future. Of course, now we're splitting hairs because we're simply doing this in an area of consolidation. We're now looking at a 60-minute chart, and we are still looking at uptrends. And here I've just noted some of the more obvious price swings here, and looking at this low, a market is making a higher low and even a higher low, taking the most recent low to even this one. Well, you say, well, why would he pick that established low? To be honest with you, you can either split hairs and establish lows like these because there's one candlestick to either side that are higher, or you can stick to the primary lows that are more or less key or more profound lows that are established in the market, and simply use your trend lines on the more distinct lows established by the market, which is a preference of mine, to be honest with you. But you can certainly split hairs like this. One reason why you may want to split hairs like this is you see here how price made a high. We're bringing some of these other factors into the market now. You see how price made a high here and price became somewhat weaker and weaker, trying to move higher but failing. Price comes down here, forms a double bottom, and again tries to make a new high. One of the reasons why you may want to pull trend lines on these smaller micro price swings is on a 15-minute chart, these would be very distinct because this is a 60-minute chart, so we'd have 4 times as many candles here, and this low would be quite distinctly established as well as this low. And if we're to start to look for a potential reversal here, or a tradable reversal, if this price fails to move above 12400, then if we start to see the price break down through these trend lines, then we can start to think of a reversal and watching price move in the new direction. Hence, try to get in the early stages of a move downwards rather than chasing the market. The further you wait, if you want to wait until price penetrates this low to trade the reversal, then you can, but you're now quite distant from your protective stop. Alternatively, you can look for this low as a level of support. On this chart, we want to show an after the fact example of what a reversal formation could look like. Let's say, for example, that we did not see this whole section of the chart. I've not blocked it off here for a reason, and we will look at some simulated trades a few sections from now. But price has trended here now. We can see on these faded green lines that we have identified the swings. Price has trended. We are now consolidating, and there's a potential we could see a breakdown at this juncture or a significant retracement And here we draw from this low point here. Again, it's a 60-minute chart. On a 15-minute chart, there would be a multitude of candles on either side of this low. We pull our trend line from this key low back to the previous low, which is more distinctly established, and we would move it out into the future. We see how price has broken through that level. It's also started to break through support and resistance line here. We would then take our next clearly established low and connect it to a higher clearly established low and extend it into the future. Again, the trend line is broken, confirming the reversal further. However, at this stage, price has moved significantly and is unlikely to lend a trading opportunity at this stage. Once this low has been broken and price has moved below this low, then we take the next previously established low, the most recently established low, and we would draw a line through it to watch for penetration of that level. Here we see prices come back and retested the trend line with a nice dragonfly doji before continuing downward. Once price has moved below this low and established a new low, then we will go back and pull our trend line back to the low, which is lower than the previously penetrated low, and move our trend line into the future as price continues to break down and trend in the new direction.